Welcome ladies and gentlemen to this video. MOHNISH PABRAI is one of the most famous value investors in the world. He is well known for his book The Dhando Investor, which I have read myself, and he employs the same principles to investing as Warren Buffett. He has achieved tremendous success in the area of investing, and in one of his recent interviews, he talked about the main underlying factor of every bubble in history. In this interview, he draws parallel between the current euphoria in the markets and the previous bubbles in history. He clearly mentions that many markets are showing similar indicators that were witnessed in the 1920s, the 1960s, and the early 2000s. During these times, markets were in a state of euphoria and the people were just paying any price for the future potential of the companies, and they simply neglected to do the due diligence to reduce their risk. This is what he said in his interview.
So I think in the 1920s, we had a major bubble in automobile companies. So any company with the name motor in it would go crazy. And we had hundreds of auto companies in the US because all these bubbles have a kernel of truth. And the kernel of truth at that time was that the horse is history. That was true. Okay, the horse was history and automobiles were going to be huge. And that was also true. So there's always a kernel of truth around which a bubble gets built. But eventually, 99% of those businesses turned out to be bad investments for investors. Okay, it was terrible. Then in the 1960s, early 60s, there was this tronics boom. So if you had a company with the name ended in tronics, okay, it got spectacular valuation because it was all about this microelectronics and transistors and how that was going to transform stuff. And that was also true. I mean, semiconductors and all of that have transformed our lives beyond belief. But 99% of the businesses went bankrupt. They don't exist, okay? Then in 2000, it was .com, right? Anything .com. Again, a great kernel of truth because it was truly transformative and we truly had something revolutionary and it has changed. I mean, without the iPhone, you don't have Uber. Okay, the whole Uber and Airbnb and all these ecosystems or DoorDash, they cannot exist without the iPhone. The iPhone is basically a supercomputer in your hand. Okay, so that enabled so many other industries. But in the year 2000, again, the .com boom, there was a core kernel of truth that, yes, technology is huge. But again, 99% of the businesses went away, right? And now we have crypto. And so the thing with the crypto end of things is that there's new coins and new currencies being created every hour. I mean, it's a frenzy because everyone thinks, hey, I can create my own and whatever else, right? And crypto, I think the last time I was seeing it's the total value across all of them is more than like 3 trillion. That 3 trillion, in my opinion, will disappear to nothing.
History does not repeat, but it does rhyme. We have made more technological progress in the past 100 years than the entirety of our existence. According to MOHNISH PABRAI, all bubbles in history follow the same pattern and are forged around what he calls the kernel of truth. These kernels of truth are new paradigms that are forged by radical new technologies or innovations and have repeatedly brought profound changes to the way we live or conduct business. Each kernel of truth creates a wave of profound change which people perceive, sense, and trust as the new transformation that will change an industry or civilization in entirety. So let's do a reality check. Did the internet change the world? Of course it did. Just look at the impact it had on the habits of consumers, the way we interact via social media, the way we conduct business, and the way we communicate with our relatives and friends. But did the 99% of companies fail in the .com bubble of 2000s? Indeed, it happened. But again, The few surviving companies like Amazon, Microsoft, Oracle, and Google have seen unimaginable growth and created enormous impact that has never been witnessed before. The same pattern could be seen in the 1920s when the automobile companies were popping like mushrooms. Now, were automobiles the future? Indeed, they were. But did 99% of automobile companies fail, which were created during that time? Indeed, they failed. No, the surviving ones created enormous revenues and have helped us in commuting from one city to another in a way more efficient way than would a horse and cart. And these are not the only bubbles. Same was the Tronics mania in 1960s. Again, we saw the exact same pattern. Indeed, the semiconductor technology changed the world, and every laptop, mobile phone, electronic system of every car, aeroplane, and every smartwatch has one or more microprocessors or chips without which they will simply not work. So the underlying kernel of truth was indeed portraying a true picture of the potential of the technology. But once again, over 99% of the companies did go bankrupt when the bubble popped. And let me elaborate a bit more on it with an example in distant past. So railway mania was an economic bubble in the United Kingdoms in the 1840s that involved a railroad development frenzy. During the bubble, the stock of railroad companies soared to astounding heights. Railroad companies massively overbuilt thousands of kilometers of railway lines throughout the UK. And railways did indeed, without the shadow of a doubt, had a profound impact on the human civilization and is still benefiting us to this day. And this kernel of truth can be stated as railways will transform the world of transportation. At the same time, we know that when the railway mania bubble eventually popped, most of railroad companies went out of business. Railway stock investors were ruined and enormous debts were left throughout the country. So indeed, history does not repeat, but it does rhyme. And now we talk about the role of human psychology. So the fear of missing out is a very strong human emotion. And when we see someone who is less clever or young and has made easy money without much effort, we want the same and cannot resist the temptation of jumping on the opportunity. During that time, media does the rest and further increases these feelings and temptation by telling us how many young people, uneducated workers, or let's say people with no background in investing, got very rich in a very short time. When we see that the teenage son of our neighbor is now driving a $100,000 car and has not even entered workforce, we start to question our own intellect and think that there must be something wrong with the way we make money. It shouldn't be that hard, and we don't want to miss out on this brilliant opportunity. Now let's see what Mohnish Pabrai thinks about the fear of missing out during the bubbles.
The thing that's difficult from a psychological perspective is watching your idiot neighbor get wealthy. It's psychologically very hard for most humans to defer gratification, and, buying something which is not, things that you can talk to your friends about or do kumbayas with them and so on, feels difficult. If you own 10 cent, no, not 10 cent, but if you own Bitcoin or Tesla, you feel like you're part of the tribe.
Yeah.
And there's enough, like I said, the kernel of truth is there. There's enough kernel of truth that you can wrap all kinds of things around that. And so then you will, what happens in the echo chambers that most of us live in is that echo gets multiplied, with all these different message boards and all of that. You're getting an amplification of the signals you want to learn. And we saw the same thing in the political process, right? You get amplification of views, whether they are correct or not. You just get a big amplification.
Right.
So that's what creates distortions. But I think for the patient value investor, it's the only way we actually make money is when things go crazy in other places and some areas get ignored.
Yeah.
So we wouldn't be able to do our craft if we didn't have bubbles happening. I was talking to some doctor in New Orleans, and I played dumb. He was just all into Tesla, all his money, everything's in Tesla, right? And he's telling me about all the great things about SpaceX, and he thinks everything SpaceX is inside Tesla.
Oh boy.
Okay, And then he's telling me about the Hyperloop. Okay. And everything Hyperloop is inside Tesla.
Boy. Yeah.
Okay. So what I'm saying is that the nature of the bubbles is people don't go into the details.
Right.
Right. And they just say, okay, everything Elon is everything Tesla.
And when Mohnish Pabrai was asked, is Tesla in a bubble? This is what he said.
Tesla is now has already produced 1 million cars in a year. And Elon is nowhere near done. Now, he doesn't make 10,000 per car.
Mm-hmm.
He doesn't even make 5,000 per car.
No.
But what is possible with Tesla is that at the end point that Tesla gets to, they could easily be making 5 or 10 million cars a year. Okay. And they could easily have at least a couple of million of those cars with at least $10,000 margins. That is within the realm of possibilities.
Therefore, in a bubble, people simply don't think about the business prospects or the real value of the underlying investment. Their decisions are solely driven by greed and the opinion of people who have little to no background in investing. And another problem is that we humans always try to seek information that confirms our beliefs. And the more we seek the information which is congruent with our beliefs, the more it consolidates our false viewpoint and irrational thinking. Therefore, we should be extremely careful when it comes to investing in new companies which don't have a proven track record, and we should not allocate more than a few % of our portfolio to their stocks. I agree with the opinion of Mohnish Pabrai about Tesla. The recent earnings report shows tremendous increase in the revenue and the profit margins look good. When all the gigafactories are operational, the production capacity will go through the roof. In 2021, Tesla sold almost 1 million cars. But this is just the start for Elon Musk. In coming 10 years, Tesla could be easily selling between 5 to 10 million cars yearly. Even with very modest forecasts, if just 5 million cars are sold at a margin of $10,000 US, it means the profits will be over $50 billion US per year. And if we just place a multiple of 30 on the profit, it would be $1.5 trillion US evaluation. I made a video on Tesla many months back to evaluate its feasibility as a long-term value investment, and at that point things were not looking that good. But the latest earnings report shows the enormous potential which this company has. Right now, of course, the stock of Tesla is overpriced and I won't be investing in it. But when the stock price goes well below its intrinsic value, at that time, I will start accumulating the Tesla stock. So right now, I am way more optimistic about Tesla as a company. Now, Tesla is also active in many other industry verticals like green energy and so on. And if we take all these cash flow generating sectors into account, and if everything goes right, the future valuation of 3 to 4 trillion US dollars won't be something beyond the realm of possibility. And I will keep you updated with the latest developments regarding Tesla as they come. Let me know in the comments below, what do you think about the current crypto market and stock market bubble? Also, what do you think about the Tesla stock price? Do you think that it is overpriced? If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you very much for watching this video. It means world to me and I really appreciate it. You are awesome, and as always, I will see you guys in the next video.